Good morning, trading world. It is October 5th, 2022, and this is my pre-market outlook and technical analysis for trading the markets. It's just before 8 a.m. on the East Coast, and let's get to the pre-market outlook. Yesterday, I spoke about a pullback coming on our way to 380. And well on our way to 380, we have to be careful of overshoots and undershoots, but we have a chance to really prolong things after this. But it is dependent upon making it through the current resistance on the daily chart at the major channel top at 379. The pullback is possibly headed towards the 372, 369 area before the reversal flips us back to the buy side. Also, watch the 4-hour chart for support and continuation details or evidence of a break in support at that 372, 369 area. I have taken advantage of the bounce by buying individual stocks like Walgreen boots, Intel, and selling bull put spreads in the indexes. Once again, the narrative is being floated that the Fed may pivot. I don't see it. There will be additional rate hikes, but human logic has to tie a reason to the bounce other than just oversold and short covering. 90% of most funds are long only, and they need certain narratives to be perpetuated so their business models can make sense. Buy and hold makes sense in a bull market, but it doesn't fit in bear markets. Let's get to the key levels to watch for the day. All right, here we are back with the key levels for the day. Starting on the resistance side, we have our jack resistance at 375 to the 376 area. Then we have our queen resistance, 377 to the 379 area. This is going to be very important over the next couple of days. And then we have king resistance, 380 to the 383 area. On the support side, we have our jack support at 373 to the 372 area. Then we have our queen support at 371 to the 369 area. Again, today this will be very important. And then finally we have our king support 368 to the 366 area. The main thesis for today is bullish, closing above the 377.97 with a projected target high of between 377 and 383. Our alternate thesis is bearish, closing below the 377.97 with a projected target low of between 376 and 369. One of the things that I do want to touch on today is, I haven't said it in a while, but we have to pay attention to when there is dissonance in the markets. And that's where the quant numbers don't agree with the technical numbers. And we have that disagreement today, and that kind of furthers the case for a explosive alternate thesis. The current major channel we are in is 364 all the way up to 379. The major channel above that is 379 up to 397. We have had a big order flow imbalance below us since yesterday, and we are finally getting traction on it. So that brings us in the scenarios of the day. All right, here we are back with our first scenario, which is going to be our rounded reversal day type structure. We could get a continued push lower towards the Jack or Queen support area and find midday chop around either the Queen or King support before spending the same energy we use going down to go back up the second half of the day. I also want to make you aware of the vice versa alert on this, and that vice versa alert looks like this, where we get a continued push up towards the Jack or Queen resistance area, and then find our midday chop, more than likely around that Jack or Queen resistance area, and then come down with the same force that we went up with earlier in the day. So that's the vice versa alert, and this is our rounded reversal day type structure. All right, our next most probable scenario is going to be our trend day down. It means we start with a gap down from the previous close, represented by the blue line here. Then we, right after the cash open, we get a pop back toward that previous close. And somewhere on or before that previous close, we find resistance and begin the reversal into our downtrend for the morning, better known as our golden window, the best time to trade. We find our midday chop around either the possible Queen or King support area, and usually we get a head fake to start out the second part of the day after lunch, where it looks like we're going to continue that main trend down, but I look for a little bigger pop or rally into the close if we have truly found support and we're going to continue this bounce. So that's our trend day down model. And let's move to the last scenario. All right, here we are back with the last scenario, which is going to be our expanded range day structure. We could have an initial fade, find support, and start to consolidate before getting a pop back up, before starting to kind of chop sideways a bit. And I kind of see us coming back to this midway point in some type of consolidation before going sideways to up again. So that's our expanded range day structure. Again, I hope all this helps, because it definitely helps me to visualize what's possibly going to happen so that I can actually be ready for it. And as always, your most important job as a trader is to protect the capital that you already have, and we do that by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I'd like to end by wishing you a positive trading day. Let's go make it a great one.